High yields are often considered to be very risky by dividend investors. Diversification, however, is well known to be a safe hedge against economic downturns and stock price drops. What if it's possible to combine the attractive returns of high yields and the safety of diversification? These high-yield ETFs can help you diversify your portfolio by investing in a wide range of different assets while also providing some truly massive dividend yields. Despite their impressive yields, all of these funds are trading at near all-time lows. Stay till the end because I'll be revealing the top-yielding dividend ETF on the market with a unique strategy for generating returns for investors. Let's take a look at the highest-yielding ETFs to buy in May 2023. First is the ABRDN Bloomberg All Commodity Strategy K1 Free ETF, or BCI. BCI is an exchange-traded fund that aims to provide investors with exposure to a diversified portfolio of commodity-related investments. This ETF seeks to track the performance of the Bloomberg Commodity Index, or BCOM, which consists of a broad range of commodities across various sectors. BCI is unique in that it offers investors exposure to the commodities market without the complexities typically associated with investing in physical commodities or commodity futures contracts. The ETF achieves this by investing in a combination of commodity-linked derivative instruments such as futures contracts and swaps, as well as other investment vehicles including commodity-linked notes and exchange-traded products. By investing in BCI, investors can gain exposure to a wide range of commodities, including energy, agriculture, metals, and livestock. This diversification across different commodity sectors can help mitigate the risks associated with investing in a single commodity, as each commodity may perform differently based on market conditions and supply-demand dynamics. BCI aims to provide investors with the potential benefits of commodity investing, such as portfolio diversification and potential inflation hedging. Commodities have historically exhibited low correlation with traditional asset classes, such as stocks and bonds, making them a potentially valuable addition to a well-rounded investment portfolio. Additionally, commodities have often performed well during periods of inflation, as their prices may rise along with the cost of goods and services. Investing in BCI offers several advantages. Firstly, it provides a convenient and cost-effective way to gain exposure to a diversified basket of commodities. Investors can avoid the complexities and costs associated with investing in individual commodities or managing futures contracts. Secondly, the ETF structure allows liquidity, allowing investors to buy or sell shares on the exchange throughout the trading day. However, it's important to note that BCI carries certain risks. The value of the ETF can fluctuate based on factors such as commodity price movements, market conditions, and geopolitical events. Additionally, investing in commodities involves risks specific to the commodities markets, including supply and demand factors, weather conditions, and regulatory changes. BCI currently yields a 22% dividend on a $19.99 share price. This ETF pays dividends annually and paid $4.41 per share at the end of 2022. To date, BCI has a total return of negative 9.4%, but their 3-year annualized return has an average 18.9%. The negative year-to-date return is likely due to the drop in share price after their most recent ex-dividend date and excludes the 2022 distribution paid on December 22nd. BCI has seen massive dividend growth over the past few years, growing from just 24 cents per share in 2018 to the current distribution of $4.41 per share. BCI is trading just above their all-time low in 2020, so now would be a good time to buy if you believe these large distributions will continue in 2023. The ETF COMB, also known as the Commodity Broad Strategy ETF, is a popular exchange-traded fund that provides investors with exposure to a diversified basket of commodities. Launched in 2017, the ETF COMB aims to track the performance of a broad index composed of various commodities, offering investors an efficient way to gain exposure to the commodities market. COMB includes a diverse range of commodities such as energy, metals, agriculture, and other natural resources. By investing in this ETF, investors gain exposure to multiple sectors within the commodities market, providing potential benefits of diversification and risk management. One of the key advantages of COMB is its simplicity and accessibility. As an exchange-traded fund, it can be bought and sold on major stock exchanges just like individual stocks. This allows investors to easily incorporate commodities into their investment portfolios without the need for direct ownership of physical assets or complex derivatives. Furthermore, COMB offers investors the convenience of liquidity. Since it trades on major exchanges, investors can buy or sell shares of the fund throughout the trading day at market prices, unlike traditional mutual funds that are only priced at the end of the day. Another important aspect of COMB is its cost effectiveness. The fund typically has lower expense ratios compared to actively managed commodity funds, making it an attractive option for cost-conscious investors. However, it's important to note that investing in COMB involves risks. Commodities can be subject to price volatility and fluctuations due to various factors such as supply and demand dynamics, geopolitical events, and changes in global economic conditions. Investors should carefully consider the risk tolerance and investment objectives before investing in COMB or any other commodity-based investment. COM currently yields a 33.9% dividend on a $20.45 share price. The ETF has been paying a dividend since 2017 and has only cut the dividend once during that time. Since 2020, the distributions have exploded, skyrocketing from only 1.6 cents per share to $6.94 per share in 2022. To date, COM has yielded a total return of 18.2% and has a 3-year annualized return of 15% per year. COM pays dividends once per year and just recently paid its dividend for 2022. We can see the massive drop-off in share price right after the ex-date in December of 2022. Since COM is trading at a huge discount, now would be the time to buy. This is likely close to the lowest the stock will be leading up to the declaration date when the fund managers announce the next dividend distribution. Next is the iShares Commodity Curve Carry Strategy ETF, or CCRV. CCRV is an exchange-traded fund that was launched in 2020. This ETF is designed to provide investors with exposure to the commodity market, specifically focusing on the carry strategy. The carry strategy in commodities involves investing in futures contracts with longer maturities and simultaneously selling futures contracts with shorter maturities. This strategy aims to capture the yield or carry from the price difference between these contracts as they approach expiration. CCRV aims to generate returns through this carry strategy by investing in a diversified portfolio of commodities futures contracts. By implementing a carry strategy, CCRV seeks to benefit from the potential price differentials between various maturities of commodity futures contracts. This approach can be attractive to investors looking to capitalize on market inefficiencies and potentially generate income from the commodity market. One of the advantages of investing in CCRV is the convenience and accessibility of the ETF structure. It can be bought and sold on major stock exchanges, allowing investors to easily incorporate commodities and the carry strategy into their investment portfolios. The ETF structure also provides liquidity, as shares can be traded throughout the trading day at market prices. Furthermore, CCRV offers investors the potential benefits of diversification and risk management within the commodity market. By investing in a diversified portfolio of commodities future contracts, the fund aims to reduce concentration risk and provide exposure to a broad range of commodities. However, it's important to note that investing in CCRV, like any investment in commodities, carries certain risks. Commodity prices can be highly volatile and subject to various factors such as supply and demand dynamics, global economic conditions, and geopolitical events. Additionally, the carry strategy itself is not guaranteed to generate positive returns and can be influenced by factors such as interest rates, storage costs, and market sentiment. CCRV's share price currently sits at $18.86 and pays an annual dividend of $6.67 for a total yield of 35.4%. Like COM, CCRV's share price dropped sharply at the end of 2022 on their ex-dividend date. CCRV only pays one dividend per year, so this price action is likely only happening during that one payment date. Since its inception in 2020, they have paid 2 dividend distributions to shareholders, one for $5.90 per share and the last for $6.67 per share. This isn't an impressive history, but it does seem like the managers of the fund are focused on strong returns for investors. If we assume the dividend distributions will be as large or larger than the past 2 years, now's the time to buy CCRV as the stock price is very close to all-time lows. You may have noticed that I left out payout ratios and income growth from my analysis. Since ETFs are structured as pass-through entities, metrics like income growth and payout ratios aren't typically reported. This makes evaluating the safety of the dividend tricky and the long-term viability of the fund almost impossible. This is something to keep in mind when you're deciding whether or not to buy these funds. Without the proper data, you're kind of shooting in the dark. This is a fundamental difference between investing in dividend stocks versus dividend ETFs. I'm not saying that one is better than the other, but there are benefits and drawbacks to each approach. What I am saying is that you have access to more information when you're buying dividend stocks, since the companies are required to report their earnings on at least a quarterly basis. ETFs are not required to do this since they generate returns in a myriad of ways, including trading options contracts, futures, or individual stocks. Thanks for watching this video. If you want more videos on dividend stock analysis and dividend trading strategies every week, subscribe to the channel and turn on notifications. If you enjoyed this video, drop us a like and leave a comment. As always, stay safe and take it easy.